Normally, when I make investments in the fund, in fact, I've never invested more than 10% of assets in any one bet. Typically, ideally, it's kind of a 10 by 10 portfolio. There was a very good investor in India who passed away recently, Rakesh Jhunjhunwala, and he never managed money, outside money, and he had probably less than $500 to his name when he started his career. He didn't live that long, actually died in his early 60s. And when he passed away, his net worth was north of 6 or 7 billion. No fees. These are all, organic. And he didn't run companies. These are all, passive investments. Half that money was from one company. So he made a 4% bet a few decades ago in a company called Titan Industries in India, which ended up becoming more than half his portfolio. And Titan has done extremely well over the years, going to keep doing well. So if you think of someone like Rakesh's portfolio, let's say the other 96% of the portfolio went to zero. He just hung on to his Titan. Well, he still end up with like 3 billion or something, And so we start out, I would say, not that concentrated. But if the job is done right, you would end up very concentrated.
Mohnish Pabrai advocates for a concentrated stock portfolio, believing that focusing on a few high conviction investments can lead to superior returns, which he has mentioned multiple times, and his example of Rakesh Jhunjhunwala has been highly inspirational as well. Let's take this example and try to get influenced by this proven strategy. Rakesh Jhunjhunwala's investment in Titan Company is one of the most iconic and successful stories in the Indian stock market. Jhunjhunwala began investing in Titan in the early 2000s. His initial purchase was around Rs 3 per share. He saw the potential in the Titan's business model, which focused on watches, jewelry, and eyewear, sectors he believed had a potential growth prospects in India. Despite the market volatility and various challenges faced by the company, Jhunjhunwala maintained his position in the Titan for over 2 decades. His long-term conviction in the company's ability to grow and capture market share in the organized retail segment played a crucial role in his decision to hold on to his stocks. Over the years, Titan's business expanded significantly, and its stock price soared. By 2021, the stock price had reached over 1,500, marking an astronomical increase from Jhunjhunwala's initial investment. In 2021, Jhunjhunwala and his wife collectively owned around 4.87% of the Titan company, equating to approximately 43.6 million shares. Based on the year-end price in 2021, the value of their holdings in the Titan was approximately 10,466 crores, which is over $1.4 billion. In 2024, the value of Rakesh Jhunjhunwala's investment in Titan Company, which is managed by his wife after his death, stood at approximately 15,562.7 crores. On 3rd of May 2024, Titan Company declared a dividend of Rs 11 per share. The total dividend issued by the Jhunjhunwalas from the Titan Company in 2024 would be approximately 479.6 crores, which is 266 times higher than his initial investment in Titan. He initially bought approximately 6 crore shares of Titan Company. The stake in Titan became one of the biggest component of their portfolio, turning into multibagger and contributing immensely to their wealth. But there's a twist. Jhunjhunwala's net worth was likely around 200 to 300 crores during the early 2000s. Based on his known investment activities and market reputation at that time, thus, Rakesh Jhunjhunwala's initial investment in Titan Company likely represented between 0.6% to 0.9% of his net worth in the early 2000s. As detailed financial records from that period are not publicly available, we made a reasonable estimation based on available information. And now the Titan investment is around 35% of the portfolio. This investment strategy emphasizes deep research and significant stake in fewer companies. His investment in Titan was driven by his insights into the rising disposable income and changing consumer behavior in India, where there was a growing preference for branded products in jewelry and accessories. He believed that Titan's strong brand, extensive retail network, and product innovation would drive this growth. Titan is cited as a textbook example of power of long-term investing and conviction in the company's fundamentals. Jhunjhunwala's success with Titan has and will inspire many investors to adopt a similar approach, which is focusing on thorough research and holding on to high-quality stocks for the long term. Overall, Rakesh Jhunjhunwala's investment in Titan is a testament to his investment acumen, patience, and belief in the potential of Indian consumption-driven growth story.
So one of the things I always kind of scratch my head about is that, these very smart investors would buy MasterCard after the IPO. And, they might be more diversified than me. Maybe they might have 20 positions, which is fine, no problem. And so MasterCard is like a 5% position. And then it does really well and it becomes a 25% position or a 30% position because it's done so much better than everything else. Like Jack Nicholson said, they can't handle the truth. And in some cases, their grandmothers took away certain body parts when they were 13. So, they're done. Well, it gets to 15% and they trim. It gets to 17, they trim again. And it never gets to even 20%, right? And to me, I really scratch my head about that. So yes, you get a diversified portfolio, but you're cutting the flowers and watering the weeds. And that's not what Rakesh Jhunjhunwala did, and that's not what Warren Buffett did. I think if an investment manager has done the job right, they're going to end up with 80-90% of their net worth in one stock. And the way they should think about that stock. So if we think about the Walton family and their ownership of Walmart, Sam Walton passed away a long time ago. There are no Waltons running Walmart. There might be a couple of them on the board, but they really don't have much influence about the way Walmart runs. But almost all the Waltons are extremely concentrated with 90% or more of their wealth in just one stock, right? So you don't need to be a founder or a founding family to have that concentration. So my friend Nick Sleep, for example, hung up his boots. He had 3 stocks and one stock, Amazon, became 80% because it did so well and the other 2 weren't slouches, but it did better than Berkshire and Costco. And the way to think about Amazon 80% is the way the Walton family thinks about Walmart stock when it's 80 or 90%, which is you are effectively like the founding family and it's a great business and you just leave it alone. But this is hard. This is hard for most people to do. And I think I have a lot of respect for Rakesh because of what he was able to do on that front.